Good afternoon to everyone. Welcome from all of us, the Energy Efficiency Mortgage Initiative, to the first meeting of the Green Arena, our Bauhaus event. It's a great honor to have 4 speakers who took the courage, I would say, to break the ice with all of you and start to present their concept, their ideas. We all feel that the wind of changes is arriving in our markets. And we, as EMF-ECBC, we wanted to create a place, a virtual place for the industry where we could share ideas and we can bring a new solution to market participants. And when I refer to market participants, I refer to lenders, consumers, investors, and authority who have the big responsibility to set a new green renaissance and change the shape of the market. We thought that all of you had great ideas. We are constantly in contact with the market participants. You call us, you raise your ideas. And we thought that it wasn't not enough to share this idea with us, but it was helpful to create a platform where all of you could see what's going on, have the possibility to speak and to raise questions. We have decided to use this special platform, which will allow all of you to raise questions. In the meantime, Jenny, I think it's difficult to find who is where the noise is coming from, but if you can mute him, please. We would like just to give you the possibility to raise the questions during the presentation and trying to really animate the debate. All the material that will be presented today will be available after the presentation on our webpage. So please don't hesitate to visit the webpage of the Bauhaus in the EMF-ECBC website. We are also preparing a second event, which will take place on the 18th of January. And we already have a very nice agenda lined up. I would like to thank Therese, Jossi, Sean, and Rory for being with us today. I don't want to tell anything about their ideas because I would like to let them explain what they have in mind. And I would like to thank especially Richard Kemmish for helping us in guiding us in these 2 hours of exchange. What we have done, we have proposed to the presenters to present their ideas in 15-20 minutes, and then opening the floor for questions or points for the rest of the time. Richard will be so kind to guide us to provoke the speakers. I ask Richard to be very provocative, to animate the debate. It's a great pleasure to be 2 hours with you this afternoon, and I really hope that you will enjoy the debate. Richard, I don't see you on the screen. I see you. So I give you the floor. And
thank you very much.
I pass the ball to you. Thank you all for being with us this afternoon.
Thank you very much. Good afternoon, everybody. So digital origination of green mortgages, persuading consumers to do the right thing, financing green upgrades via existing mortgages, and of course, the most topical topic of all, the reaction to the EU's proposal to put the taxonomy into law. We have 4 extremely different topics, very diverse topics that we'd like to present to you today, but with, I guess, a common theme. All of them are very relevant to what we all, to some extent, are engaged in, and more or less the broader subject of climate-friendly finance. And they're perhaps a little bit different from the normal EEMI initiatives, the normal debates that we tend to have. And I'd like to reiterate before we start with Therese with our first presentation, I'd like to reiterate what Luca just said. Please come back to us with questions. I'm going to offer the floor to questions after each presentation, but if you prefer, if you'd like to put it into the chat room, that's absolutely fine. If you're like me, you're a shy person, please feel free to just message me directly with any questions that you have. And Luca said we have some ideas for the 18th of January for the next meeting. When you see the sort of topics that we cover,
they told me.
Maybe you have some other ideas for other topics that you'd like to see, perhaps you'd like to come yourself, please do get in touch with us on those. But I'd like now to move straight to our first presentation. Therese Ruth, who, like many of us on the call, has a background in banking, specifically in the area of consumer lending, but whose new initiative is an attempt to, I think, create digital origination for consumers, which is aligned with what we're trying to do here, aligned with the taxonomy. Therese, I can see you there in the picture. I was looking at your website today and I was very impressed with the comment on there. It stuck with me that most of the buildings that we're going to be living in by 2050 are already here. I think that's a very important point, and it emphasizes the need for upgrade if we're going to achieve our objectives. But Therese, can I ask you, give you the floor and ask you to present a little bit about what you do at Hemma?
Thank you, Richard, and thank you for having me. I really appreciate the opportunity to be here today and to meet you all. This is such an important network, and many thanks to Luca and team to what they're doing. As you said, Richard, my name is Therese. I'm from a Swedish mortgage institution called Hemma. So we all know that we're facing a number of challenges to reach the climate targets, and there is no doubt that the emissions coming from residential properties is one of the big ones. Next slide, please. Could I have the next? Thank you. Last week, the Commission published, as we're all talking about, the public consultation of the criteria under the EU taxonomy. And to me, it's obvious that the financial industry has a huge responsibility and a huge task to accelerate mitigating activities. It's clear that we need to provide a path to force transition. Looking at residential properties in Sweden, actually only 1% is classified as A, while 99% to a various degree will need to go through some sort of measure, or indeed in some cases a massive renovation to become sustainable and in effect future proof. Next slide, please. Today, this transition is really not happening fast enough. Our observation is that there are two key reasons on a consumer level. The first one, and I think most important one, sorry, we have a mute on. Robert, please.
Therese, sorry, just...
Therese, I muted the person, so you're okay, I think, now.
Oh, okay, thanks. Sorry, so again, our observation is that there are two key reasons why this doesn't go faster on a consumer level. The first and most important one being that there are no financial or limited financial incentives to go through these renovations. And secondly, it's a very high barrier for most customers to know what options are available for them and their house, to decide what is the best measure, and at the same time organize the funding and the installation as such. It just needs to become easier. We at Hemma, we want to change this, and 2 years ago I founded Hemma to deliver an easier and more profitable solution for consumers to invest in energy renovations. So we have put together a team with background from the financial industry and the tech industry to help the customer through the journey, from choosing the renovation that fits your home to making the investment more profitable by enabling a mortgage package that is attractively priced, and thereby creating a financial incentive for the consumer. We do that in a couple of steps. Next slide, please. First step is that together with experts in the respective field, we have put together a number of standardized packages. These renovation packages will in the absolute majority of cases reduce the primary energy demand with at least 30%. A customer will be guided to the best solution for her or him, depending on the type of property, size, age, location, current technical infrastructure, install base, etc., etc. Next slide, please. And secondly, although there are standard packages, every house and home is somewhat different. And to manage this, we have set up a network of trusted partners that have the expertise and can do on-site visits. Partners consist of energy companies, solar panel suppliers, and heating pump suppliers, construction firms, etc., throughout the Swedish market. And they're able to meet up with the consumer, deliver the necessary tailor-made finish and advice, and we can therefore help the customer from start to finish. Next slide, please. And when a customer decides on an offer for renovation, we have to validate that the activity as such creates enough additionality and that it is aligned with the taxonomy. So what we have done is that we have built a proprietary validation engine to make a digital pro forma energy performance certificate for the property with a chosen renovation package. And it makes sure that the specific conditions are taken into account. To that, we use third-party data to validate the input we get from customers and partners, as well as to an AI-based algorithm to validate the impact of the energy renovation. This is a fully digital model, which has been based on data on historic outcomes from similar projects to fine-tune results. But when the renovation is complete, we still send out a certified inspector to generate a new formal EPC based on actual performance. The new EPC is then fed back to the validation engine, which will help us in the future to take even better decisions and create better suggestions to our customers, as well as, of course, also minimize any errors in this value chain. Next slide, please. And when we have validated the offer from a sustainability perspective, Hemma will finance the activity by extending and refinancing the existing mortgage. The customer journey is fully digital with 0 papers to the consumer, and it includes a full underwriting, of course, with credit scoring, ability to pay, collateral valuation, etc. And currently, as it looks today in the Swedish market, this product will lower the monthly cost for an average Swedish customer with around 100 to 150 euros per month from day one after installation. Green mortgage discounts already exist in the market today, but mainly for those who have already completed their investment. I think it's our joint task at hand to make it more accessible and cheaper for those who are making a real effort to invest in a sustainable home. As a customer, you know you pay less, you have made a significant investment for the climate, and you have probably also increased the value of your property. We at Hemma, we will also help and support customers in suggesting new efforts for the future based on the data on their energy consumption that they will share with us post loan disbursement. Our aim is to generate really satisfied customers that can work as ambassadors to accelerate the Hemma movement, where more people see the win-win solution with energy renovations. So final slide, and next slide then. Our aim is really to accelerate the necessary transition by making it easier and more profitable for homeowners to invest in a sustainable home. So the most important word here really is transition. Some properties will undergo a massive renovation at one point, and for others, there will be iterative investments that are necessary. We will continue to recharge and incentivize homeowners for continuous improvement of their homes to become and remain sustainable. We feel confident and we're ready to scale up here in Sweden, and we hope to meet you all in Europe someday. It has really been a pleasure to be here today. And I would finally like to mention that even though we probably come from big or small companies in the financial industries, I think we're all dependent upon good relations and cooperations with each other in some way. So I think we all agree that there is no other way than to get this renovation wave started, although we all come from very different starting points. What we do at Hemma in summary is that we try to add to this table a process with very low cost to serve and a very efficient distribution. And if there is anyone here today that would like to continue the dialogue with me or with Hemma, I would very much like to get to know that. And I also thank you so much for listening today. Thank you.
Thank you very much, Therese. If I can, moderators prerogative and ask first couple of questions myself before throwing it open. Yep. I think the first thing is the obvious thing, that the front end looks terrific. It looks extremely user friendly. Can we ask about the back end, about the financing and how you then take this and where does the money come from?
Yeah, our first step is what we have organized is a so-called mortgage fund, and that our analysis was that this is sort of the lowest cost option to get into the market. I think this is a technique that has been used mainly in the Netherlands. However, I mean, since obviously we're an originate to sell business, I mean, we would welcome corporations with banks or other asset owners as well going forward.
And when you say mortgage fund, you mean directly to asset managers, pension funds, those kind of people disintermediating the banks? But am I right in thinking?
Yes.
Yeah, so bearing in mind there's a lot of bankers on this call, but am I right in thinking that you'll be equally open to either form of banking or direct lending?
Definitely, absolutely. We're actually in dialogue regarding corporations with a few banks at the moment. And I think in order to solve this problem, the structure with mortgage funds is not going to be sufficient on its own for the whole journey that we're facing. So definitely, we would very much like to cooperate with banks.
Right. And then another question which occurred to me was you mentioned that you've been set up for 2 years. And obviously still at a very early stage in the process. And I appreciate that it's not just you, it's a team, and I appreciate that 2 years is quite a lot. Is it, I don't want to put words in your mouth, is it fair to say that it's quite difficult setting this up, that there's a lot of licensing, a lot of approvals, a lot of regulation? Is there anything that could be done to streamline that process to make it easier?
Yeah, I think, I mean, first of all, I should say that, you know, it's still it shouldn't be done overnight because, I mean, we're obviously, you know, financing consumer homes. So definitely, you know, a thorough due diligence has to be made on those companies that are getting into this. And, you know, you have to be able to prove that you have the stability and knowledge. But secondly, I think you're doing very much the right thing in this network, and that is to sort of, you know, streamline and create access to funding. The mortgage labeling certificate being one example, because I think we will all face the challenge that, you know, we will have to attract funding for these mortgages in the future. And for that, I think it's so important that we have a, you know, a standard and you know, a reporting, and also that we all work together in creating knowledge on this area. Right.
Can I throw it open to the floor? Are there any questions for Therese about what she's covered or what she hasn't covered?
Richard, I think there was a question in the chat from Carmen from Moody's.
I can't see that.
Well, perhaps I can see Carmen. Perhaps she'd like to ask the question.
Yeah, it's from Fitch actually. Sorry.
Oh, sorry.
But, yeah, that's okay. That's okay.
Oh,
right sector. Anyway, just a quick question. Are there any statistics that you can cite? For example, number of transactions that you've been able to fund, and in any information on performance?
You mean on the underlying loan portfolio?
Yes.
With us, I think we just started our mortgage operations, so I think it's a bit premature to share statistics. From that perspective, the portfolio, if you look at the whole Swedish market, you know, almost none is actually offering sort of tailor-made mortgages for energy efficiency, although I believe mortgages, of course, are used for that purpose. And, you know, this is just really very much in the beginning. So I'm happy to come back to one of these events in a year or so, and you know, to let you know more about how our borrowers have performed and what feedback we have gotten.
Thank you.
Therese, it's Piet Hein from the Netherlands here. Do you only offer mortgage financing, or do you combine different financing solutions on your platform? Because a mortgage might not always be the best solution for a borrower.
I very much agree. And as we recently started, we're only offering mortgage solutions, but we are looking into sort of, widening the product scope in the future, because I think that you are right. So we will most likely do that.
Thank you.
I've got another question which has been sent to me. In your mortgage fund, let me just summarize this. In your mortgage fund, are the asset managers specifically green investors, or is it for their general books?
I think what is going to happen is that I do believe basically all asset managers will have to have a portion of assets that are aligned with taxonomy. So we're not specifically targeting green investors. We're targeting everyone. However, I think the knowledge about this transition and this renovation wave sort of varies quite a lot between these different institutions. But we're definitely meeting anyone, and I believe that this is something that any institution is currently looking at, and everyone wants to sort of increase the ratio of taxonomy aligned assets. So, however, the fund, yeah, sorry.
No, go on.
Now, I think what we do have is a very strict governance that, all lending that we do has to be aligned with our green financing framework. So we don't do anything besides that. So we don't have sort of a brown book on the side. So if it doesn't fulfill our eligibility criteria, we pass the full client to another financial institution.
I can see where the question's coming from, though, for asset managers. Is there a sort of a thought of, well, how much of my portfolio, I've got all these people who've lent me money, I've got a fiduciary duty, should I have 20% green or 30% green or 100% green? Yeah. Or is it just an investment? It's an investment.
Yeah, I mean, I think it's still very, very early days when it comes to sort of implementing the taxonomy. I mean, we just looked at the public consultation last Friday. The institutions that I meet, they're currently, I think strategizing around how they will implement this in their sort of regular portfolio management. And some of them have come very far and some are just starting. But I think obviously there will be transparency and they will have to disclose how much they have done in the future. So I believe it's a problem that they will, it's not a problem, it's a challenge that they will have to, come up with a strategy to address.
Sometimes feels that banks are under much more, with all of the new things in terms of capital allocations, in terms of disclosure, standards, stress testing, that banks are perhaps a little bit further down the line in terms of optimizing how much should be green.
Yeah.
Does anybody else have any?
Yes. No, sorry, I think this is something that we will see a lot of news and thinking done in the next 6 months. I certainly hope that the development will be rapid in this area.
Does anybody else have any questions for Therese?
Yes, I have a question here, Therese. How is this service? How's this service being promoted?
So at the moment, we're promoting it and offering it quite exclusively in cooperation with our partners. As I mentioned, we've partnered up with energy efficiency firms or suppliers in this area. So that is what we do at the moment. We are then looking to sort of have a broader launch where we also channel customers to them. But initially, we are starting, promoting it in cooperation with our partners. And that works out really well because that is also strengthening their offer to sort of install these type of equipment to be able to offer a very attractive financing solution, which will then increase their conversion, so to speak.
May I ask you a question, please? Hello, I'm Katia Alves from UCI from Spain. Very, very interesting presentation, Ruth. So congratulations, first of all. I would like you said now this last question. You said that you're offering this service through your partners. So the selling point are your partners. Is that correct?
Currently, yes. So there are two entrance points. You can either come to us through one of our partners, or you can in the future come to us directly through Hemma.se, our webpage.
But when you say your partners, you mean, for instance, Nauf Installations, or you mean companies that helps to install geothermal solutions? Only that? It's not an integral total refurbishment, energy refurbishment? Because
That's
when you
yeah, sorry.
No, because when you say energy efficient partners, from my point of view, you will go to the geothermal solutions and to other renewal solutions and insulation and windows and doors. So you go that side, or you go in the side of the total refurbishment?
I think we're doing both, and you know, there are a number of measures. So as we've put together a number of standard packages that, you know, for certain types of houses will create a dramatic reduce in the primary energy demand. So that we have done, and that can be a sort of, you know, different package for different types of properties. In some cases, you know, the isolation is the lion's part and the sort of, you know, windows, while in other cases, if you have a direct heating through electricity, it might be better to have a geothermal heating pump. So it varies with what kind of house you have and you know, where you are today, what you need to do, what's the best measure for you.
And when you say that you ensure that you'll get to the client and make them see the clear economic incentives, are you working with anyone else to do that kind of accountability?
Yeah, sure. We always, I mean, first of all, I mean, we put a good trust in our partners and you know, make sure that they are validated. But we also have our own engine to sort of get a second opinion on what has been done, and we also start with sort of standardized packages where we have a, you know, very high reason to believe that the package suggested will work on the customer site. But in the end, we also do, you know, an external validation with a new EPC after the installation. So that is our process.
Thank you. Thank you very much, Ruth. Thank you.
Thank you, Katja. Thank you for good questions.
Thank you. Before we move on, Therese, one last question if I can. Looking at who's attending here, you've got a lot of people in Brussels, a lot of people in Commission who can have input into the taxonomy, can have input into lots of other aspects. Any requests?
Yeah, I mean, I just read today, just before this meeting, that there came some statistics regarding Sweden that less than 50% know about sort of the UN sustainability goals and what they mean. So I would just like to stress that we have such a, you know, important education that we still need to carry out, and I can only speak for Sweden, but at least here, and I think it is so important that this journey that asset owners and you know, the managers of our collective capital, you know, to really to educate them and to make sure that we have clear targets also on that end, not only by banks or you know, mortgage lenders. That is so important. So I mean, I'm happy to contribute in that in any way I can. Thank you so much.
Brilliant. Thank you, Therese. Thank you for everything that you're saying and you presented today. I'd like to move on to the magnificently named company iNudgeYou. Jossi Steen-Knudsen who's the Chief Operating Officer of iNudgeYou, which is a company attempting to apply behavioural change, applied behavioural science to the topic of persuading people to do the right thing. Now, I'm not even going to try to explain what applied behavioural science is. I'm going to leave that to you, Jossi. I would say, looking at your website this morning, it's a fascinating website. You clearly, as a company, cover a very wide range of things, not just climate change. Many of the things that you do are on that website. I strongly recommend it. I got completely sidetracked reading about the behavioural economics of going on a date on your website, which I found completely fascinating. So, Jossi, can I ask you to please introduce iNudgeYou, explain to us exactly what behavioural economics is and how we can apply them to the outcomes that we'd all like to see. Jossi.
Sure. Thank you very much. And hello, everybody. So I see my presentation is on. Does it work this way, Richard, that you will just, click through the slides, or should I take over?
It's as you wish, Jossi. I can give you control of the screen if you prefer to do it yourself.
Yeah, that'll be nice.
Okay, give me 1 second while I just find you in my list. This is the only. Okay, I'm going to make you the presenter.
Okay, you have the power.
You have the power now, Jossi.
I have the power. Okay, great. I'll try to use them. Yes. Yeah. No, it's a long journey for me. I see with the setup. So please, sorry, Jennifer. Yeah, you just go through the slides. That'll be easiest, I think.
Okay, no worries.
Giving the task I'm giving here. Yep. All right. Thanks a lot. So hi again. So next 15 minutes or so, I will present to you a small presentation I've prepared, labeled Behavioral Insights within Energy Labeling Schemes. And please go forward one slide. And this is the agenda. I'll start out with a quick presentation as you asked for, Richard. Who are iNudgeYou? Who are we? What is nudging to those of you who don't know exactly, and what is applied behavioral insights? So those two things, of course, highly related. Why are behavioral insights so important, so relevant for housing renovations? And lastly, how can many of you financial institutions or in that area apply behavioral insights to promote green lending and to promote energy refurbishments? Yes, one more slide, please. Right, so this is iNudgeYou in a nutshell. We are an applied behavioral science group. Thanks. We are specialized in applying behavioral insights to obtain positive behavioral change. So it's actually written in our profile that we are a pro-social company. So this is very important to us to accelerate the green transition. We work a lot with this during the last 10 years. We work globally. We have an office in Copenhagen where I am located, and one as well in Buenos Aires for the American markets. And what we do is that we do 4 things. You can say we do behavioral consulting, that is projects. We work together with clients, other stakeholders, and then we fix a problem, try to fix a problem that they may have during a couple of months or even years at times. Then we teach a lot. We have Pelle Guldborg Hansen. He's the CE of iNudgeYou, and if you know a bit about behavioral insights and nudging, behavioral science, you would know Pelle Guldborg Hansen. He's a very recognized researcher within this area. So he's the one usually teaching our masterclass and also doing the workshops abroad. And then we build nudge units. So if you're an organization who would like to work with this more in-house, then we help out with that in a process of a couple of months. We have carried out more than 100 experiments, we call it. Experiments, that is where we put the solutions we develop to test. That's very important to us, that we don't just raise our finger and have a good idea what to do and present that, but we actually try to test it in split testing, A/B testing, randomized control trials. We have done that a lot. That's also the basis of the research that Pelle is doing oftentimes. So it's quite a heavy of high academic standard, I would say, a lot of the work we are doing. Last year, we published a report together with OECD, or more correct, the OECD published this report, which was co-written with us, with Pelle Guldborg Hansen. And in this report, our approach, which is called Basic, was stamped as the best practice approach working with behavioral insights in practice. So that's a longer report. I'll just put a link now in the chat if you're interested for this basic report. If you want to have a look, 150 pages of goodnight reading at some point. But that's our approach. Yes, that was us. And now to nudging. I promise to give a quick presentation of what is a nudge. This is a very simple, a layman definition. A nudge is a planned aspect of a choice situation which should not affect us in theory, but it does in reality. So a homo economicus, a rational person, would not be affected by nudging. That person would already do what is in that person's best self-interest, but we, you guys, all of us human beings, we don't always renovate our house, although we could actually save some money, simply put. Then if this is true, then if such a situation exists, then nudging is relevant to use. Another way of explaining that, when to apply behavioral insights, is by having a look at the intervention ladder. If I press one more time, this is another way of explaining when to apply behavioral insights. If you press one more time, you'll see that the standard approach to achieving behavioral change is to use information as a tool, communication, to do a campaign. Maybe if you are a public sector or private sector, you would try to explain to the world why something is important. For example, if you would like people to quit smoking, you would tell them quit smoking. If that doesn't work, you would try with arguments. That might be a good idea to tell the negative effects of smoking, that is, it's really unhealthy, and there are also side effects and for your family and so on and so forth. So that is the first thing you will try out. You will use communication. If you press again, then you'll see the next couple of steps on the intervention ladder, which are economic. You would, especially if you are public government, if you are public authority, you would maybe try out positive or negative incentives. So in the case of cigarettes, you could make it cheap or even free to attend quit smoking courses. It's a positive incentive. Or you could have a tax on cigarettes. That's very common, to have a negative incentive to make it more expensive to buy cigarettes. Still, you would see a lot of people, well, it will work for some, it will maybe reduce the use for some, and also there are others for which this will not really work. So the last thing to do in the standard go-to kit is regulating. Regulation is the last way out to say it's not allowed to buy cigarettes if you are below a certain age threshold. We forbid it simply. Of course, that you can always do, but we would like to avoid this. These are the standard tools in the toolkit of a public authority when trying to change behavior. Now, when is it relevant to apply behavioral insights? One way of answering this question is simply to say, when this does not work, then you would try to have a look at behavioral insights. Is there something else we could do? If you press one more time, Jennifer. So in this case, you would see that, of course, the assumption is that you have a person that is interested in carrying out the specific action you have in mind, and you try all these steps on the intervention ladder, and still they don't do what is in their best self-interest. Then you can try out applying behavioral insights. Two quick examples. Sorry?
Oh, I think there was just a bit of interference on the line, Jossi, but I think it's okay. If necessary, I will mute the interference.
Okay, no
Carry on.
No problem. So of course you can see what this is, and this is a garbage bin on the street, and this is a garbage bin we developed 10 years ago. And if you ever come to Copenhagen, you will see these all over the place. So this was a solution to people throwing garbage on the streets, of course. A problem which municipalities and governments often they often approach with the standard tools of a campaign, saying, "Oh, you shouldn't do this." But the problem is not a question of, people don't agree with you. You need to convince them it's bad to throw garbage. The problem is most often a problem of attention, that you overlook, simply don't see the garbage bin. So we made it very visible. Salient is the word, and we also put some footsteps to try to nudge people to go those extra meters. This is a very standard example of nudging, but we tested it and it actually works. We handed out a lot of caramels to see where the paper ended up, and they more often end up in the garbage bin when you make it more visible. So that's one example, and another one is from the healthcare system. So this is the entrance of a hospital. So what you see here is a hand sanitizer, something you all know what is today, but when we did this more than a year ago, not a lot of people use the hand sanitizer when entering a hospital. And again, what often happens is that there's a campaign at the hospitals because a lot of people actually die. I could go through the numbers, I don't have time, but it's very important that people sanitize their hands once they enter a hospital, simply put, but they don't. So of course they try to change behavior here, making an information campaign. And this campaign has a slogan saying, "Clean hands saves lives," which is good. And then next to it, the hand sanitizer. And what we did, and we also tried to get people to sanitize their hands, we and Jennifer, we simply moved the hand sanitizer closer to the entrance. You can see the doormat. So of course this is the entrance, and we simply moved it a couple of meters, and then we removed the banner, the roll up. We thought, okay, let's try it without, might not be necessary at all. And if you press one more time, you see the figures, and we observed 36,000 people entering. We had a person sitting observing 36 or more persons over many weeks, and we did many solutions, and this was better by a factor of 5, which is quite a lot, of course, compared to what is the standard solution. So just another really simple example of the power of applying behavioral insights, and the point is, it's really important to understand what is driving behavior before coming up with the solution. So in this case, what is driving the behavior once you enter a hospital is that you are trying to navigate where to go, and people, again, they don't see the hand sanitizer. It is not that they don't agree that it is important to save lives and to sanitize their hands. They know so, and they're also willing to do so. It's just that they overlook it. And also there are a couple of meters, so it might be a bit too much to ask for. So just moving it actually really helped. And there was an even better solution than this that got it up to 20, but that'll be another time. Right, if you press one more time, Jennifer, you'll see. So now we turn to this topic. Why are behavioral insights relevant for housing renovations? Well, first of all, one more time, it is quite intuitive. I think we all know this, that there are many behavioral factors when you consider renovating your house. And these behavioral factors are most often barriers, unfortunately, that we don't know as house owners. We don't know a lot about this. This is new ground to be covered. We are quite uncertain. We perceive the complexity as very high. And we know that it involves a lot of stakeholders, sometimes many, sometimes just more than one. We need to organize everything and coordinate everything ourselves. We might not know how much time it'll take, how much it will cost. We might think that it will be very expensive or that the rate of return is low. So there are really, really many, and I'm sure if I asked, you would all have more than this. There are many, many reasons for why it is so important, it's so difficult for people to carry out the renovations out there. But actually, before this, before all these barriers that I just mentioned now, there's another really, really crucial thing to understand, and that is these barriers are all secondary. They are all assuming one thing, and that is that we are actually considering renovating. So all these barriers, they only come into play, they only become relevant once we are actually thinking about doing something. Before that, you know, they are no problem. So if you press one more time, so last year we worked the entire year for the Danish Energy Authority, helping them out with creating more action on the market for housing renovations. And the most important finding, I think, is that people out there are generally not attentive to the option of refurbishing. And the reason for that is that there's a lack of natural decision points, we call them. That is points in time where you as a house owner is actually sitting down and thinking, should I renovate or not? There are not many triggers that forces you to make this consideration. And that is the biggest problem. Once you consider, then you have many other problems you need to address. But how can we create more decision points? Jennifer, one more time. That is really, really, really important. And of course, these decision points, they need to be at the right time for the right target group and the right communication form. All these things are a major part of the solution. And that is what one needs to understand before coming up with a communication campaign that is widespread. So we should understand what we're trying to do. And this is where I think you come into the picture. And by that, I mean the financial institutions. If you click one more time, this is my final slide. Then we'll take a question session. So how can financial institutions or the bank sector in specific apply behavioral insights to promote green lending? So say you have the products on the shelf, green lending products or tools, but still having those tools or products, how can we get somebody, a house owner or a company, but say house owner, to say yes to that product and to carry out something and do something? Well, one more time, please. Well, two things I'd like to stress. There are many things to highlight, but two really important things, and I apologize for the picture, but one thing is that it is really, really important to address the specific situation in which there's a bank advisor or a financial counselor talking to the relevant persons, the house owner. That situation is really important, not just to give a couple of advice or technical knowledge, but really to make it safe for them to have this talk, to put green lending or refurbishments on the agenda. You might have that goal, you might ask them to do it, but will they actually do it? And will they do it in an efficient way? We have worked with this a lot for many banks in Denmark only, but we found out that it is very difficult. And there are things you can do and things you should do if you want to achieve the right behavior on the banking side. And one of the things that is important is having the right tools. So that's the right-hand side. So you could have optimized behavioral tools, you could say, things that will make it easy for them to have this discussion without fearing that they are responsible and they are talking about something that they don't know anything about and they are out of the comfort zone. All these fears that specific person is experiencing, you would very much like them to get rid of those with something they can point to and deliver and hand over. That will also ensure that activity is being done, that there are steps to be followed by the house owners. I'll stop here. Thank you very much.
Great. Thanks, Jossi. I'm going to open the up for questions if I can. Before I do, or whilst people are thinking about the questions they'd like to ask, I've got one general question about behavioural economics. You said that you have an office in Buenos Aires and Copenhagen, slightly different cities. Bearing in mind you've got a lot of people on this call from a huge number of different jurisdictions, how scalable is it? How culturally specific is this kind of thing? If you did those interventions you mentioned with the bin or the hand sanitizer, it works in Copenhagen, is it going to work in Buenos Aires? Is it going to work in Lisbon or Bucharest? Is it very cultural?
Yeah, that's a very good question. So yes and no in terms of are they scalable. So there are many reasons for why they are, because we are all humans. So there are many things we have in common, fortunately. But of course, there are also cultural factors as well as legislation that is different and really important to understand before being able to scale or to hoping for spillover effects or to implement in other countries. In particular, for this area, for the housing area, with all the regulations there, in terms of we have worked with the energy performance certificate and the labeling system. I mean, it's different in every country. So this is really important to understand, of course. But once you understand the field, then afterwards, I'd say that we are not that different in terms of the solutions when you approach it in the right way. I hope that makes sense. But I think most often we find that the human factors, they weigh more than the cultural factors. And actually a word as culture is not something that we ever use in the behavioral world. It's simply too abstract, and we always talk very concrete.
Okay, I'm going to ask you about that legislation in a second, though. Before I do, I'm going to throw it open to the floor. Everybody online? Any questions for Jossi? Everyone's really shy. Okay, whilst you think
just wondering what.
Sorry, Rory.
Can you hear me?
Yep, we can hear you, Rory.
Yeah, I was just wondering, what sort of specific interactions with your bank or finance provider would you be thinking about as the moment to introduce a green finance to someone? Maybe like a remortgage, or have you done some research into that?
What sort of product or interaction from the bank advisor side? Can you repeat the question? Sorry.
Yeah, what kind of interaction would you having with your bank when the suggestion of a green home improvement will be made?
Yeah, so the good situation is, of course, the meeting where you sit, well, not these days, but otherwise when you sit opposite to each other at the table and you have a discussion. And then at some point, the bank assistant or bank counselor would say, and then we have your house. This could either be agreed upon before, based on information that the bank counselor can retrieve, or that they have sent in. There are many ways of doing this. We have it online, publicly available in Denmark. If you have the EPC Energy Performance Certificate done, then you can just get the data, and that we did in a large experiment. So the bank advisor actually had already a one-pager with the house. If you put back the presentation, Jennifer, and you press one forward, you can see the energy performance certificate that we made for the Danish Energy Authority, which they will implement this year. And in that, we made it really simple for the bank advisor to talk refurbishments without talking out of their comfort zone, because all they had to do is to point, and it was not their words, it was a technician's words. So they could only say this might be a good idea, and these are the steps to do it. Yeah, exactly. So that was the first page of that energy performance certificate, and the one pager for the banks had a lot of things in common with this. So there are only 3 things highlighted from a long report with many initiatives that we see as very profitable for you to carry out. So you should really consider those. And on the next page, you'll have a step guide how to do it. And that is it. And then there's no responsibility or anything for the bank counselor. some banks, of course, have agreements, so this can be done in many ways with energy advisors that go out, and then there are some money, and there are many business models that can be implemented in this, many ways to go. But I really think that this meeting and what the bank advisor is saying and is handing out, and the agreement, and that is so crucial. And the idea is that at times the house owners, they didn't even know that this was coming. They didn't in our case when we tested it. They came in for something completely else, a yearly meeting, but it was just a positive surprise. It was really perceived as a service. Once the talk became only for 3 minutes, became about their house. They have actually done some research, and it was all true. So yeah, that was a long answer.
Richard, if I may, on behalf of Alexandra from Münchner Hypothekenbank, I think she was asking a very similar question, actually, Jossi. So she was interested to know how we can make it safe for bank advisors to talk green solutions. So I think you've probably answered the question. Alexandra, did you have any other follow-up questions, or did Jossi answer your question?
I could maybe add to that. Sorry.
Yeah, we can hear you. Yeah, go ahead, Alexandra.
Oh, fantastic. I wasn't sure whether you could hear me. No, yeah, that definitely did answer my question in part. Maybe there are other examples that you could just bring up on, what do you mean by making it safe, and what some of the truths are?
Right. So a common approach so far that we have seen too many times is that the banks, they think what is needed for the bank advisors is technical knowledge. And also the energy consultants, the advisors, they also think, oh, it is technical knowledge. But having a session about heating pumps will not make it easy for the bank advisors to talk about heating pumps. I mean, it is still not nice for a 50-year-old man who has no experience within this area to talk about this. So they need something they can point to, saying somebody else, a specialist, is saying this and that and that, and they have a course, and they are taught in delivering that message, not in understanding the whole thing, but in delivering a very clear message, and then explaining what are the next steps for the house owner. And that is simply that is the task here, to deliver a message, not to solve a problem. And that's where I think we see too often that people go wrong in what they are trying to do and make it too complicated for the bank advisors to do this.
Thank you very much.
Are there any other questions for Jossi?
Maybe Richard, Luca here from. We see from our members, Jossi, a lot of more activities on the mortgage market after the pandemic crisis. Do you see that the pandemic can change the behavior of our consumer and the relationship between the house and the green investment? How do you see it? I mean,
yeah, that's a good question. I think yes. I mean, first of all, for the very simple reason that we spend so much time in our house these days, and we also work, many of us at least, I'm sure all of us here in this meeting, at times work in our house, becoming aware of the characteristics of our house, and also on health and the linkage between health, indoor climate, and housing. That combined with the green wave and the attention to this topic is definitely something that I predict will raise in attention and open us more to actually doing something. But still, what is really needed is the trigger, because we see a lot of people who would, yes, if everything was handed on a silver plate, they would sign off and say, it is a good idea, I know this, but still there's a long distance before you reach the last mile where they can just sign off that letter. And here I think financial institutions really have a good potential of being one of the few trigger points in a person's life to promote decisions regarding energy refurbishments. Yes.
I can finish if I can, Jossi, with a final question. When I asked you about cultural differences, you mentioned legal and legislative differences, I think. as with Therese before you, there's an awful lot of legislators on this call at the moment. What could be done to help? What's the best approach to legislation to allow you to encourage this kind of behavior?
Yeah, so for us, I mean, so we are working with behavioral insights. So we don't come up with suggestions to new types of legislations. What I meant was more that you need to understand it really in order to sometimes place yourself in the slipstream of regulation. So having understood the rules of the game will allow you to identify the touch points and the hotspots. I mean, the situations where it is crucial that you do something differently, because right at this moment they are very open to do this or that. They are already in contact with this and that because of the legislation. So here we should intervene and do this. So understanding the rules of the game is highly important in order to do a very good solution in terms of not doing anything new in terms of legislation, but simply working with the rules that exist already. Often this requires collaboration between different organizations to break down maybe decision silos and that sort of thing. We have worked very closely with the real estate market in Denmark and the banking sector because there's a very important linkage here, of course.
Okay, understood. Thank you, and thank you for your presentation. Now we're going to move on to our third topic today. This is incredibly timely. On Friday, I think it was, the European Commission came out with their proposals for putting the taxonomy into law. I think it's got an incredibly short consultation period. I think it's only 4 weeks that we're allowed to have our thoughts and share our thoughts with Commission on this. So it's incredibly timely that we have Sean Kidney speaking. Now, if you're in this area, you probably already know Sean. For as long as I can remember, he's been a very clear and forthright voice for this. As CEO of the Climate Bond Initiative, he's primarily how we know them. But in general, as I say, a long-standing champion of the product. One of his roles is on the European Commission's platform on sustainable finance, which now, Sean, you could probably tell me say this better than I can, but as far as I understand it, that's the group who are going to be owning the taxonomy and developing the taxonomy going forward. So Friday's announcements are absolutely key. Sean, can't see you there, but I'm assuming you're in here somewhere.
He's here. He just arrived.
Yeah, great. Sean, I wonder if you could just share with us your thoughts on what was announced on Friday, where it fits in, and good points, bad points, things they could do better.
Look, the Commission released the Delegated Act on Friday. There is now a 30-day consultation period. I heartily recommend you all have a look at it, and I'm desperately keen for Luca to coordinate a response from ECBC and EMF and anyone else to the Delegated Act in terms of areas of improvement, I think is the best way to put it. You will be familiar that, some of you will be familiar with the technical expert group provisions from earlier in the year. This is now the Commission's turning this into regulation and addressing some of the, let's call it bun fights, that we say in English, that have happened within the Commission in that process. It does mean that not everything is where I would like it to be. What I'm going to do is to tell you a little bit about what the criteria are and where they stand now, what the pressure points are from my perspective, and what I think we need to try and do as a community working in this area going forward. Because there are a couple of challenges in all of this. To finish off your comments, though, I'm the CEO of the Climate Bonds Initiative, which is an NGO, and we're kind of like the global NGO for green bonds. And we've had a green property bond certification scheme going for many years. one of the theories of change we had around energy efficient buildings, and we've been a member of the EMAP project with Luca and Jennifer to try and push this line, if you like, is what we would call an idea that we would have a best in class with a tightening threshold approach to qualifying buildings. And in the climate bond certification, the top 15% of buildings when it comes to emissions performance in any one jurisdiction qualify at first, but that measure becomes a kilograms per square meter measure and tightens down to zero net carbon by 2050. Most European cities now have a climate bond zero net carbon threshold. Sorry, I should say an emissions per square meter threshold for buildings. Of course, in most sectors, such as property, it doesn't work. The asset is too small, so you need to use proxies. So what we've been looking at is relevant proxies in different areas. While we use other proxies like IFC's Edge or levels of lead, in Europe, of course, EPC has been the most valuable, but we know the EPC scheme varies dramatically around Europe. And so a consistent approach to using EPCs is not really available to us, unfortunately, in Europe. When we looked at this question at the technical expert group discussion, the Commission was insistent that we needed to use energy criteria before emissions criteria, although our primary principle is actually emissions reductions, because we were looking at climate change mitigation. You know, the question is how much is energy the correct proxy for emissions? There are circumstances where it isn't. I won't go into the arcane details. I'll simply say that in the technical expert group recommendation, we adopted a model that the primary indicator, until we had solid emissions related data, which the Commission was not comfortable we had available to us, would be the top 15% of energy performers in any one market, with an indication that within 5 years, we would have emissions performance data. So as you can see, this is a dynamic system that we were proposing that would be subject to continual improvement. Specifically, we were going to move to hard measures within 5 years, which is, for example, emissions per square meter or energy equivalent, which would then reduce every 5 years down to a net zero position by 2050. In other words, we want supremely energy efficient or emissions efficient buildings by 2050, and we were looking at a linear progression. In other words, drive the market. The theory is if we start at roughly 15%, it's generous enough that most banks can do something in this area. We can get an appetite for green bonds from banks and so on, as we've already got in Europe, and we can then continue slowly drive quality in the building sector until we get to the requisite outcome. So that's the idea. There were challenges with new buildings because of the NZEB scheme, which is coming in, which is changing the landscape of criteria. The particular articulation I was referring to primarily applies to existing buildings. In other countries of the world, where you don't have the same differentiation between new build regulation and existing building regulation, we've used the same approach for both sides. Top 15%, whether it's a new or existing. In Europe, where the NZEB scheme in many countries, although I will say again, differentiated application or implementation across member states means it's not consistent across Europe. But nevertheless, it's a substantial improvement, I think is the correct word to say, on what was there before. So we do expect new buildings to have a much lower energy footprint or emissions footprint going forward than old buildings, and much lower than the existing footprint. So what we had said in the technical expert group recommendations is that we wanted for new buildings NZEB plus 20%. In other words, a little bit better than the mandatory regulation to call a sustainable building. And then there was a renovations requirement of 30% improvement to be able to count a loan for renovation on energy use, if you wanted to count that in your sustainable portfolios. There are also a range of do no significant harm provisions which were proposed, some of which, a number of which are covered by regulation in Europe. Thou shalt not use asbestos in the building, for example, which has been articulated because there are still countries where those regulations don't exist. We want to make it clear to other countries trying to raise money in the European market, level playing field if you like, they had to comply to the same regulation. But a number of the do no significant harm provisions complied with the regulations. So in the delegated act, we have a couple of anxieties. I guess the key anxiety is around the metrics for new buildings. We have some concerns because the current regulation restricts existing buildings, restricts them to buildings that receive an EPC-A qualification. Now, EPC-A in Romania means a very different thing to EPC-A or EPC-1 in equivalent in France or the Netherlands. So there's a lot of variety. Our reading is in the markets where we've seen green property bonds issued before, we are not that likely to see any bonds that would qualify because of the paucity of properties that meet the top level of criteria. So the idea of developing a market and then tightening the noose in that market becomes very, very difficult to make work under the current, the proposed draft act. I can sort of see why the Commission got there. They were very keen to use existing labelling schemes in Europe, Commission endorsed labelling schemes, of EPC, of course, being the key one, along with NZ. And they did accept the argument that EPC B or 2 in some markets was horrendously weak. I think our friends in Romania say that EPC B in Romania would allow you to have 30 or 40% of the whole built environment in Romania included. I don't know if that's true or not, but you get the idea of the criticism. So what they've done is they've gone safe. And they said, well, look, if we keep it to EPC A or EPC 1 in Europe, everything will be basically good. Now, there may be very different levels across different member countries, but at least we're safe on the right side of the angels, if you like, at least for the moment. As I said, the difficulty is it squeezes out the possibility, frankly, of doing green bonds, and it's not consistent at all with the market that has already developed in Europe for green bonds. And one of the Commission's briefs to the technical expert group was to build on existing green finance markets, not to bring in criteria that were so stringent that you couldn't have a growth from the existing market. I mean, it's pointless saying that you can only have water infrastructure that is perfect now. You've got to have some way of saying, let's drive the market going forward, was the theory behind it. So our feeling is that on the substantial contribution levels, for existing buildings, I'm talking about climate bonds here. I'm not wearing my hat as an EU platform member or a TEG member yet, because I can't speak on behalf of those bodies. That the criteria for existing buildings is too tough to be workable. And we would rather that the Commission adopted the TEG's recommendation, which is to say, just prove that you're in the top 15%. There are multiple methodologies. You can use the emissions performance measure that climate bonds issued. There are building standard regulations that can be used. In many markets, the EPC is a reasonable proxy. In the Netherlands or France or Sweden, for example, for EPC A and B or 1 and 2. The local government can put together a formulation to make that claim. All we need is a reasonable claim, and let's accept it. And let's not worry about perfection at this stage, because frankly, there's also an onus on the Commission to get its act together around the EPC scheme, which is a mess for the reasons I mentioned earlier. And if they can sort that out, then we can have a consistent wide approach across Europe. So that would be our position on that. So I'd like to put that to you for comment and see what you think. There are other issues. In the do no significant harm provision, there is a very generous requirement around adaptation measures. And that is that all dwellings, whether it be a bed sit in Bratislava or a large mansion in Mulhouse, has to have an adaptation, proof of an adaptation and climate risk assessment, whether it's an existing building or a new building. And these don't really exist outside of large investments. If you're doing a large housing estate, fair enough. But identifying a green building for the purposes of green mortgaging for Société Générale in France, this is a challenge from the data point. What we've put to the Commission is that where there is a reasonable regulation, judged by the Commission, from a municipality or a member state, which addresses adaptation and climate risk, then we should refer to that. In other words, Société Générale can check whether Alsace-Lorraine or France has an appropriate link, whether it gets a tick from the Commission, and if it does, automatically all dwellings in that jurisdiction would have met that particular provision. Of course, if the municipal plan doesn't meet that provision, the dwelling owner can still get a consultant to check they've got an adaptation or climate risk plan should they wish. That option is always open. But we're simply saying, if there's regulation, you're covered. Don't worry about having to require. At the moment, unfortunately, the individual homeowner has to actually find the evidence of compliance or proof of a adaptation and climate risk assessment and provide that to a bank before a bank can call their home sustainable for the purpose of this. And this is a large cost of transaction from our perspective and unnecessary given the intent of what we're trying to do. Berlin has a very good adaptation and climate risk assessment plan, for example. So we would say that this particular do no significant harm provision should be derogated in Berlin, automatically covered. I'm told today that Bratislava has one now too. It didn't have one. I'm not so sure about England, but hey, England's leaving the community anyway. So you get the idea of what we would like to do in this particular space. We're still looking through the Commission's latest draft of the other do no significant harm provisions, because what we want to have is a bias towards where there is regulation, you are automatically covered, which requires us to have clearer idea of regulation. What we didn't want to happen at a TEG, and has crept into the Delegated Act, is a requirement for the householder to prove they're covered by regulation. Again, cost of transaction. We'll have a closer understanding at the end of the week when we've gone through it, because the Act only came out on Friday. But I think they're the key things. If we make this work, we think that we can have a large green property bond market, and we hope we can have a criteria which is consistent with the conversations that have been happening in the past at EMAP. That was the dialogue that we're looking at. But the current criteria, we've got a hiccup, let's just say. Now, it is a 30-day consultation period, and then after that, the Commission will consider changes and then provide it to the European Parliament, which will have 60 days to approve or reject the regulation. Unfortunately, the European Parliament process is not particularly flexible, that they only get the right to accept or reject. They don't really, is my understanding, please correct me if you know better, get the right to fiddle with the detail, which means our next 30 days is what counts. So literally 30 days from, I'm not sure if it's last Friday or today, I've yet to check that, to put in views about what needs to be changed. And then secondly, there's a strategy of ensuring those views are heard. We know that a lot is happening at a DG level, and forgive our friends on the call if you're from a relevant DG, DGs do not always have a clear understanding of how the market works. We're aware of this, and we've become conscious of this in appreciating some of the drafting that's gone on from DG and others. So it's incumbent upon us to, if you like, let them know that some things make it impossible for the market to respond adequately and really from a usability perspective. And this is one of the things we're looking at now, the practicability perspective. I don't get anyone debating the intent of what we're trying to do, either at a commission level, at a market level, at a bank level, or at an NGO level. It's all about how to make it work efficiently. So I think the real opportunity for us is to do that, but we will need to also ensure this is escalated. What we can't afford to do this is leave this at the level of people who are trying to make it work at a bureaucracy, because, well, really the way things will be shifted is if the likes of Frans Timmermans and Ursula von der Leyen decide this is important to fix. So we need to use every political leverage we can, should you agree with me, which I don't know at this stage, to address the important changes that we might require or might think are necessary to make this effective. There are some big wins in the taxonomy, as is published last Friday. None of those wins are certain yet. There is lots of rumour of a push coming from industry to weaken dramatically the electricity generation criteria or the transport criteria, for example. But at the moment, in those areas, the headline wins are certainly wins. There are other areas, agriculture, bioenergy, buildings, where we're not comfortable, where we need to do some fixes. So I will be out there welcoming the taxonomy and saying we need to do some adjustments. In the property area is one area where I think we need to make some adjustments. That's my view. I might go back to you now and see what you think.
Great, thank you, Sean. That's as ever, that's a fantastic explanation of things. I've written down a huge amount of stuff, and I think we all agree with the intent. The thing about making it workable is absolutely key. But let me throw it open. We've got a lot of people on the call. Any responses, any questions, any disagreements?
Yes. Hello, this is Elizabeth Mignot speaking. I switched off my camera because otherwise I always have connection issues. So I'm speaking on behalf of BNP Paribas Fortis and the National Belgian Hub. What concerns the remark of the 15%? First reaction is, why don't we leave both options? Because concretely, as a mortgage bank, I really can't see how I can prove that the asset is part of the top 15% in the country. It's already difficult today to know if there's clear EPC databases, if on a national level, we don't have one database on a national level here in Belgium. And then if we have to find out whether or not it's part of the top 15, this seems to be very complex to us. I think having label A is much simpler and is much more straightforward what is concerning us. So yeah, I would say I think it would be better to at least leave the option of label A, at least what concerns us, because if we don't have this, then we won't have anything. I cannot see concretely how we could even have something, and then this will just be a theoretical exercise, and yeah, it won't serve many purposes. On top of that, our regulator now has officially requested or will officially request as of next year to report all the EPCs on the assets. So it is it's something that will need to be captured anyway, and I would be surprised that we're the only country where this is going to happen. When we heard the EBA talking last year, it was clearly just a matter of time that EPC had to be captured. So that's why I wouldn't be in favor to this 15%. Thank you.
Maybe I'll just address that because that's a very substantive point, if that's all right, just for explanation. You're right, but bearing in mind, with the top 15% rule, we have tens, I think about 50 billion of green bonds already certified against that rule in Europe, in France, in Netherlands, in Germany, and so on. So it does apply. There is a methodology there, and it's really relatively straightforward. But yes, wherever possible, identifying the relevant EPC level is the simplest route forward. For example, EPC A and B, Netherlands, we consider our client bonds to approximate 15%. I agree with you, leave the A there. We've never had any problem with A. The problem is B, because in many countries we need B or need 2. In France, we might even need 3 to approximate this level to be able to give a large enough market to get going. Whereas in Romania, we only want A. So it's very much a jurisdiction-specific assessment about what is a relevant EPC level to approximate. So the idea is you start off at 15% and then you look for the relevant level or make the arguments. But if you start off of only A, you're not going to have a lot of buildings, unfortunately. It's going to be a very small market relatively. That's the anxiety. So Elizabeth, I agree with you.
Thank you.
Why can't we try to work more to standardize the definitions? You said about EPCs varying a lot across Europe. Why can't we come up with a common understanding of what A means?
Oh, wouldn't that be fantastic? Oh, yes.
What's the barrier? What more work on that?
Well, a number of bodies, non-commissioned bodies, actually haven't looked at it. There is research available, but the Commission had undertaken to do research at the beginning of the tech process. They didn't follow through, or they didn't make available to us. We've never been able to figure it out. I suspect it's a political hot potato between member states. But the Commission doesn't want to be seen to criticising member state implementation of EPCs, so they have kept away from any kind of public assessment. So it's terminally doable. We don't see it as a major barrier. Give a research budget and do it. It's eminently doable. It just hasn't been made available publicly, or possibly hasn't been done yet. And so the question is, what kind of body would do it that the Commission would be willing to recognise?
Yeah,
that's the question.
Answered. Other questions for Sean?
Maybe Richard, Luca here, from just to inform everyone that the Advisory Council of the Energy Efficiency Mortgage Initiative will be discussing exactly this topic with Sean very soon. The idea is to prepare a common response, taking on board all the views. So we ask all the pilot phase banks to react very soon. I think next Friday is the deadline for the pilot phase banks to react to us. As Sean said, I think the window to make any change, it will be only during the consultation. So the deadline is very clear, is 18th of December. So we need to give a strong response, and we have only 4,000 characters. So because the response to this consultation are very limited. So in one page, we have to concentrate all our views. But I mean, we are very glad for Sean and to all the members of the Advisory Council to help us in making a counter proposal to the European Commission, which will take on board most of the views that will be collected. Thank you.
Richard, can I ask a quick question of Sean? Sean, it's Jennifer here. Just what we did notice in round 2 of the Delegated Act on Friday was a reference to EPC A and B, where the criteria is do no significant harm for existing buildings built before the 31st of December. That appears to be some kind of effort to respond to our concerns with regard to the mitigation criteria. What's your view here?
It seems to be inconsistent with the substantial contribution level. So to be honest, I think we need to figure out the import because I'm confused.
Yeah. Okay, we were equally confused. So I'm glad that you're confused too. it seems to be a kind of some kind of acknowledgement of the concerns raised. So I was wondering, maybe this is where the Commission is trying to land now, and is this their kind of potential compromise? So we were just trying to figure this out. So I'm glad that you're confused too. We're all confused together for the time being.
There are a couple of other areas where there are inconsistencies like that. So to give you electricity generation, they've maintained a threshold of 100 grams of CO2 equivalent per kilowatt hour, which excludes unabated gas. But in the do no significant harm provision, if you make adaptation improvements to a gas plant, there's a threshold of 270 grams. It looks like you can count the whole value of the gas plant.
Okay, yeah.
Which is like a backdoor way of getting a gas plant, well, at least one that takes a little bit of hydrogen, around the criteria of the threshold. So now we're not sure whether it's intentional or not, but it's confusing. And so similarly here, I suspect what we've got is a few inconsistencies that we need to draw attention to. And it may be that you're right.
Sean, can I just, Richard, if you allow me, just one last question, which is slightly different, slightly separate from the Delegated Act, but there are a number of other issues, Sean, which are really related to the usability of the taxonomy, which are kind of different, which are separate from the actual list of activities. At what level are these kind of usability issues being addressed? The whole kind of grandfathering of bonds and those kinds of questions that we've discussed in different fora.
Sure. So for my sins, and I must have done something terrible in my past life, I've taken on the role at the usability subgroup of the platform, because usability is a platform brief of pulling together recommendations for improving usability from the usability committee of the platform. And I'm looking at exactly all of these things.
Okay, great.
It's certainly clear that from the Commission perspective, arguing things, whether as an outsider or as a platform, from usability and practicability grounds is the most likely way of getting a positive response.
Yeah.
For other sectors, it's going to be a tougher argument because of the nature of the negotiations and compromises that have happened over the last few months. So I'm very keen for ECBC and EMF and EMAP to put in responses around usability. But I'm also keen for you to share those with me so I can see if I can get a usability committee to also back them. My trouble is I have a 2-week deadline, which is mad. Because of the papers and processes, I have to put in all my recommendations by the end of next week to the platform usability committee so it can make the paperwork. So if you're looking at this week and next week, please let me know. I need all the help I can get.
Okay, thank you, Sean. That's very useful. Thank you.
Support you. I mean, Sean, Anton House, we will be there to support you, and we invite all the pilot phase banks to help us in getting this right all together. Yeah. Thank you.
And everybody else on the call for that matter. Sean, thank you so much. This is obviously such a key topic at the moment. We appreciate it's a crazy busy time for you. So thank you very much for joining us. And if we can, though, in the interest of time, move on to, last but not least, Rory Duff. Rory is representing Add to My Mortgage, another great name for an organisation, which the way Rory has described it in the past seems like an incredibly simple idea that's really difficult to implement in practice. Rory, can I just hand the floor to you to explain it? You'll explain it much better than I will.
Thank you, Richard. Can everyone see the presentation? Okay, just let me know.
We can, yeah.
Great, okay. Okay, everyone. Hi, good afternoon. I'm Rory Duff, founder and CEO of Add to My Mortgage. Thank you very much to EEMI for giving us the opportunity to tell you about who we are, what we do, and why we believe we've got an innovative product. So you can orientate yourselves. We are focused on green home retrofit for domestic properties, so people's homes, which in the UK accounts for a large proportion of CO2 emissions. So we're on a mission to unlock the investment needed to make our homes cheaper to run, more comfortable, and most importantly, greener. There's a reason we list those goals in that order. When we surveyed homeowners about green home improvements, first and foremost, they said it needed to make financial sense. And after that, in order of priority, comes comfort and green. We've included the BEIS logo, Department of Business, Energy, Industrial Strategy here because we are winners of the UK government's Green Home Finance Innovation Fund competition. So what do? We give green vendors, so that's people who install insulation, heat pumps, solar PV and home batteries, a unique point of sale finance solution for their customers. And the key takeaway here is that our product is offered at the point of sale by the green vendor at the moment when the customer has a need for the finance. And why is this important? Well, Forbes magazine suggested that sales could increase by 1/3 when point of sale finance is offered for a retail business. We actually think that impact could be higher for green home improvements as a vertical. So here's an analogy of what problem we're trying to solve. Imagine you're in a dealership and you're buying a new car. For customers who can't afford the upfront payment, the dealers have appropriate tailored finance solutions at the point of sale. So you've got hire purchase, PCP, contract hire, personal loan, and all of them are offered seamlessly at the point of sale. And this has transformed car sales, with 80% of new cars come with PCP today. And the interesting thing about these finance solutions is that they are specifically designed for the product being sold and give appropriate and attractive solutions for many of the customers. Turning to green home improvements, they have a high upfront cost, which is just like a car. But unlike a car, a green retrofit must justify itself in financial terms. But with low financial yields, green measures take a long time to pay back their initial investment. And what customers say is this is an area where it may be difficult to justify a big upfront payment. But if the savings made by installing the equipment came out above the monthly payment, they wouldn't see a problem. So what options does a green vendor have today? Well, unlike our car dealer, green vendors today can only offer customers personal loans, unsecured, with 8 to 10% interest rates and maximum terms of 10 years tops. We know heat pumps have a life of 15 to 20 years, solar panels 25 years, and insulation maybe 30 years plus. And typically, the internal rate of return on these investments might be low to mid single digits. So there's two problems with a point of sale personal loan. Firstly, there's not enough cash from the investment to make the loan repayments as they fall due. And secondly, there's negative carry because the interest cost on the loan is higher than the IRR of the investment being made, the green home improvement being made. So we say that this is therefore not an appropriate solution for green home retrofit. And as we talk to you guys today, we think the only form of finance that offers both low interest rates and a repayment term that mirrors the life of the green asset is the mortgage. And with Add to My Mortgage, we think the green savings exceed the mortgage payments from day one. And as I said before, the point of sale loan, you can see this example, over £130 a month, there's no way it covers the benefits that can be made from the measures themselves. So bringing this together, these are the three things that we believe are true. Mortgage additions are the natural way to fund green home improvements. Secondly, green vendors are the natural distributors for green finance. But lastly, maybe arranging additional mortgage borrowing today is difficult, slow, and most importantly, it's not joined up with the purchasing process. It's a separate activity that the homeowner has to do as and when. So this is what our innovation is. This is where we fit in. We make it easy to purchase green measures via additional mortgage borrowing at the point of sale. So we provided seamless digital customer experience. We recruit, vet and manage green vendors for competence and quality. And we give the mortgage lender the data to prove they've made a green loan, capital G, capital L. And every deal that we do has a customer satisfaction note, so we know whether the green vendor is doing a good job for their customers. And what we give to the mortgage lender is an underwriting pack, including customer data, property data, green measure details, information about the vendor, and that's prior to installation. And once the installation has been done, we provide an installation pack with evidence to show that the job has been completed, including photos, the customer satisfaction note, warranty information, details about the measure that's been installed, etc. So we showed potential customers at My Mortgage. The response was really positive, with 9 in 10 saying they would consider using it for a £10,000 home improvement. And even better, I think, is that Add to My Mortgage was seen as a potential enabler, with 89% saying would make them more likely to consider investing in energy efficiency improvements. And this comes back to the earlier point about it needing to make financial sense for a homeowner to bite the bullet and make the financial decision to purchase. And maybe this touches on some of the nudge points about making it super easy for the homeowner. And this is why we think an appropriate point of sale finance solution is more important for the green home improvement space than other verticals. So customers said it makes financial and environmental sense, and maybe it appears cheaper and less. And this is an interesting one. There were no separate payments, just one monthly mortgage outgo. Now, that didn't seem like a big thing to be, but apparently quite a few customers like that feature of the product. So we've built our own in-house proprietary software platform, and it talks to third-party data sources such as the Land Registry in the UK, the EPC Register, where we can get details of the property's EPC rating, credit reference agencies, and open banking. And this allows us to bring together a very rich set of relevant data, which combined with what we get from the green vendor and the applicant gives the mortgage lender everything that they could want to know about the deal that we're putting to them. Applications can take as little as 2 minutes, and this can be done from any device, so mobile, tablet, laptop. And we also oversee the installation and sign off of the green measures through our installer portal. The installer can log in, see all their jobs, upload paperwork, and see customer feedback. So a green vendor can be anyone from a large blue chip utility to a local gas engineer who is retrained to install heat pumps. And again, maybe this comes back to the nudge point mentioned earlier, that a natural point for a customer to consider maybe switching from a gas boiler to an air source heat pump would be the point where their boiler is broken down and they're getting a gas engineer to come out and quote for them. Today, they're just offered another boiler, but wouldn't it be great if the gas engineer had an option to offer an air source heat pump with an appropriate form of finance that could mitigate some of the upfront cost of that air source heat pump, the difference in. Second important point, I think, is that our regulatory design means that green vendors don't need permission from the FCA, which is the UK financial services regulator. They don't need their own separate permission, which is different to point of sale credit, at least in the UK. And our revenue model is to charge green vendors a small percentage of each deal, so there's no cost barrier, initial upfront cost barrier to them signing up, and as a result, vendor recruitment can be streamlined and we can grow our network rapidly. We work within existing laws and regulations, so we're not dependent on government action to grow, and I think that's an important aspect of how we work. So we can be there to help green vendors scale their businesses in the decades to come. Turning to lenders, we have starting to build relationships with mortgage lenders, including NatWest, who we signed the Green Home Finance Innovation Fund competition alongside. We think there's several benefits to mortgage lenders. One is perhaps increased customer loyalty. They help their customers achieve a goal that the customer wants to do, but they also potentially provide a defense against the customer refinancing to someone else who can help them. We think this is a practical and innovative way for them to reach their EPC targets. So, for example, a number of banks in the UK at least are targeting to get 50% of their mortgage properties to EPC or better by 2030. And we're also giving free origination. So because we charge the green vendor, there is no cost to the mortgage lender. Perhaps coming back to the point that was raised by Hemma at the front, actually, we're also trying to reduce the cost to serve by packaging and bringing together all the data for the mortgage lender. Lenders in the UK, like nationwide, are encouraging people to take up green home improvements because they're offering green additional mortgage borrowing products at lower interest rates than they would otherwise. And we hope other lenders will follow suit. There are some holistic benefits other than the CO2 savings. We think this is fair by design because actually we're offering customers their lowest cost of finance at the point of sale, whereas perhaps previously when you buy a car, you're not going to get the best finance deal because you pay a little bit effectively for the convenience of it. But actually, because it's your existing mortgage, it's fair by default. We offer this product to both small local SMEs as well as large blue chip companies. So actually, we think this could be a good post-COVID support for SMEs. And as we learn about green vendors over time, getting customer feedback for every deal they do, we can build a directory of trusted and good green vendors. We won't work with the bad ones. And that allows us actually to do the journey in reverse. So a mortgage lender who wants to actively promote a green home improvement to a customer has actually got a directory of vendors they can send the customer to. As a business, we have an experienced team with a track record of success, and we're focused on building practical solutions to get us to net zero by 2050. And thank you, that's me. And just to say, my contact details are on the right if you would like to reach out. And the customer research we've done is publicly available. Just let me know and I can send you a copy of the piece that we've done. And we've also done some work on how we actually tie in with the Loan Market Association's green loan principles, which we can also send to anyone who is interested. That's it from me. Thank you.
Thanks, Rory. Can I pick up on one point that you very briefly mentioned? I just want to make sure that I understand it about FCA regulation. Nice picture, by the way. FCA regulation. So the person coming up to do this change is then selling you the product as well, and they're exempt from regulation despite selling a financial service. How does that work?
Correct. Yes, because it's a mortgage. And this is part of the way the regulations work in the UK, because it's a mortgage and not a personal point of sale credit loan. Actually, it works out that they are exempt from being regulated as an FCA credit broker. We actually, as a platform, take on that role. So we are regulated, and we look after the regulations on behalf of the green vendor.
Right, understood. And then at the other end of it, obviously you're working closely with a lot of banks there. And first of all, in the UK, I have no idea, I'm guessing there are 100 different mortgage providers. Do you have to provide a different package to each of them? Is it an incredible logistical thing of integrating into their systems? And then how much can they rely on those systems? And I think about the cost of providing a mortgage. Some of it's a function of the loan to value ratio, some of it's a function of the EPC, the risk. Talk to me about the interface between what you do and 100 different lender systems.
So, yes, there are about 100 different lenders in the UK. 70% of the mortgage market in the UK is the top 6 lenders. So actually, in terms of getting coverage, the critical thing is obviously working with the big 6, if you like, typical sort of Pareto rule. I think all of those mortgage lenders are used to working with brokers today. So they all have a broker market, except today that the broker market has always been about new loans or remortgages. So there's a slight quirk in us in that we're actually offering additional borrowing on your existing mortgage. But in terms of working with a third party to deliver new business, they're all well used to that. It's just the case of, well, actually, it's just additional borrowing, not a whole refinance in this case. Right. We don't, whilst we give the whole package, which will tell the lender the existing EPC rating of the property, what measures being installed, and what improvements they can expect. We don't tell them what to do in terms of the underwriting of, like, well, actually, you know, could the property be valued at a higher level because of the measures being installed? Is the customer actually in a better position on terms of their affordability because they're going to save money or earn some money on the solar panels or the heat pump? We leave that really as a sort of, they underwrite the customer on the existing merits.
Right.
Although we'd love to be able to incorporate that in a positive case for the mortgage lender. We don't assume it today.
But it's up to them to use your data to try to improve LTVs or prudential treatment or whatever.
Yeah.
Okay. Can I throw it open to the audience? Does anyone have any questions about what Rory does?
Hi, Rory. This is Luca from the Open Bank project.
Hi.
Thank you for the presentation. I just have a question regarding integration with the mortgage lenders, the technical integration. And the question is how difficult you find this technical integration to be finalized, to go to production in a sense. Is there a standard in place? Thanks.
I think today, you know, our MO, modus operandi, is to basically make a super slick upfront customer journey. And then at the back end, it's going to be fairly, perhaps a slightly more manual. I think because basically there's already an existing process that happens with the mortgage lender. We are actually just providing that data to be able to effectively integrate with that manual process. Now, having said that, all of the mortgage lenders we are talking to are considering effectively creating additional borrowing APIs. And they are at various different stages of being on that journey. So I think ultimately we will just hook up with that API, but today the process might vary differently by different lenders. But as I said, to get the good coverage of the market, we're just looking at the top 6 lenders. We need to just look at the top 6 lenders in the UK. And there's also another journey which is around perhaps looking at lenders with large buy-to-let or landlord mortgages, where there's legislation which is now mandating EPC improvements on landlords, and we can actually do the journey, as I said before, in reverse. So the mortgage lender provides us with landlords who we know we can fund, and then we move forward with an offering for that landlord and basically make it really simple and put it on a silver platter for them.
Thanks, very interesting. And do you know if there is already working group working on this standardized API protocol for this specific use case? In other words, the data that you push into the bank, I guess you're pushing EPC data, you're pushing other type of data, but is there a way to standardize the type of data in order to make other application more pluggable, if you want?
I don't know of anyone working on a standardized approach. I haven't come across that, at least in the UK. I think it will be very, the main driver of the approach and how banks do this is the Financial Conduct Authority, which is the regulator. And they each have interpreted the regulator's rules on doing affordability checks and underwriting checks in their own way. Now, having said that, they all ask for very similar sorts of information. We would hope that through time, actually, what we can do is, because we're talking about relatively small amounts of money, we want to bring the cost to serve down. So we want to make it a very slick digital customer journey rather than have any kind of bits of paper flying around or anything like that.
Yeah, thanks. Helpful.
Any other questions for Rory? Okay, in that case, I'll ask the last question then, Rory. Given similar question that I've asked before, given the people on the call, a lot of them from a regulatory perspective, what can we do to help the journey?
Certainly, we would very much welcome a dialogue with, for example, the FCA to say, well, in this particular example, where we can show that the customer is saving more getting more benefit than they are paying out in their mortgage costs. Is there a way we can streamline the process for the mortgage lender, reduce regulatory risk when they do additional borrowing, in our case? But equally for the mortgage lender, what's the benefit to the mortgage lender from effectively helping the homeowner improve the EPC rating of their property? I think ultimately we'd like better treatment on capital ratios to effectively, or some incentive for the mortgage lender to actually make this happen and reduce the cost of their finance to the homeowner.
Yeah, and so there's a lot of initiatives trying to persuade exactly that at the moment.
Yeah.
You're pushing on an unlocked door. Brilliant. Thank you so much, Rory. Really appreciate your presentation today. And thank you also to Therese, Sean and Jossi for your comments today. Thank you everyone who has stayed with us for over the course of the last couple of hours. As I say, please keep the 18th of January free for the next event. And any feedback on how we've done it today, things you'd like to see, volunteers of information, please feel free to get back to either myself or the EMF-ECBC. With that, thank you, and I'm going to hand back to Luca for any closing remarks.
Thank you very much, Richard, but thank you very much, Rory, for your presentation, to Sean and Jossi and Therese. We hope that we are all a bit better informed, a bit more confused, because I mean that's the scope of having a brainstorming, that we all reflect about solutions. Our staff will put on your presentation online so people can directly raise questions to you, and that's exactly the purpose of this event, raising a dynamic dialogue. I would like to say a few words about the next event. We have a very interesting agenda also for the next event in January. We have a major national champion who will present their green mortgages. We will have also this interlink between insurance and mortgage lenders, which is a very interesting topic. And we would like to discover a bit more about the unique identifier idea. So having a common numbers identify the mortgages and the data aspect on consumption. So this is the agenda for January. Please don't miss that window. We are very delighted that you had the opportunity to spend 2 hours with us this afternoon. I really hope that we can contribute to the debate of the European Commission in a constructive way, building a new mentality into the market in the entire value chain. I thank you all of you as participants for the trust and for the support. To all our pilot phase banks, I would like to say, please send us back your comments as soon as you can, because we have 20 days to reply to the European Commission. With this, Richard, once again, thank you for this dynamic and spicy animation. And I hope to see you soon. Please stay safe and enjoy a lonely Christmas, which this will be the future for all of us. Okay, cheers. Thank you. Bye-bye.
Bye-bye.
Bye-bye. Thank you.
Thank you, everybody. Bye-bye.
Bye-bye. Thank you. Thank you.
Bye.
Bye.
Bye.